Great. How wonderful. So welcome today to the inaugural series on the carbon finance through the Carbon Finance Collab under CFAR Alliance. And we're really excited to restart the brown bags, but in the format where we're geared around learning and structuring it on thematic areas that we think are timely and important for understanding what the carbon markets evolution will look like in the markets where we work and the impact we're trying to have. And so this theme in particular is focusing on understanding some of the controversy, but also unpacking what transparency, what quality of carbon really comes down to, and how innovators like Renoster are helping to signal quality and create trust in the carbon markets and help spur buyers and sellers. So it's very timely, very excited to have this session and the theme that we're covering. So I'd like to pass it to Tim to introduce our speaker today. And thanks to everyone for making it.
Wonderful. Well, yeah, thanks so much, Jane, for queuing this up and everybody for showing up. And then Saif for joining us this morning. I know you guys got a lot going on. But it's just a bit of preface. I met the Renoster team, gosh, probably about a year ago. I originally found them via how I find a lot of companies I get excited about, which is through the users or customers or kind of stakeholders. I'd talked to a lot of different project developers and, was asking about how they look at the market evolving and key players that are going to come and really ensure trust and transparency, potentially play the role of like the bond rating agency in the market. And bar none, all of them said that they really believed what Saif and Elias, his partner, are building is really the way to go, the one that they think is doing so in an open way, a transparent way, and the one that they would trust as developers to engage with and work with and essentially have their data processed in that way and prove that they're doing what they say they're doing. So that to me was a really strong indication that they were onto something really interesting. And since then they've published a number of different blogs you might have looked at that I think have exposed some pretty shocking revelations about certain projects. And then their tech has progressed to a place where they can really show through these kind of dipstick tests how different portfolios of carbon projects of some of these major buyers have a number of risks associated with them. So in short, really, really impressed with what they're building, kind of the way that they are approaching the market. And then as always, their insights into how the market's evolving. So I'll hand it over to Saif. Yeah, feel free to please introduce your background and then take it from there.
Yeah, thanks, Tim and Jane. Really awesome to be here with you this morning. I'm going to share my screen real quick, and then hopefully you guys can see this. Can you guys see my screen?
Yes.
Awesome. Yeah, so thanks for having me again. I'll just walk through a really quick agenda of what I have planned to talk about, and then I will jump into it. So yeah, a quick intro, and then I'll dive into a brief rundown of what Renoster is all about, what we're doing, and then a couple of examples, I think, of carbon projects and finance that are done poorly, and then ones that are done right. And I think there's going to be a very clear trend line that I'm hoping to draw for everybody between size of projects, in particular, when it comes to the money trickling down to the right people, the people who are part of the communities on the ground that are living this project day to day. But before that, I'll just dive into a quick background on myself. So my name is Saif. I'm from London originally, but I've been in the US for the past, or specifically Austin for the past couple of years. And in the past decade, I have been working in the carbon markets and have seen the quality question in particular really evolve and change in that time. So in 2013, I was first buying credits as part of a sustainability initiative. And the objective there was to first identify what does our footprint look like as a large corporate? How do we identify opportunities for minimization of that footprint first, and then offsets? And at the time, the method by which we went about buying offsets was really talking to the project developers, looking at project documentation, and making a decision based on conversations, and the quality question really wasn't part of that conversation at all. In the intervening decade, we've seen the carbon markets indulged by criticisms, right? We've got John Oliver, The Guardian, Bloomberg, plenty of other news sources that are criticizing the quality in the space, and to be honest, rightly so. At Renoster, what we have seen and what our goal is something like 75% of the credits today may not be additional. They have many underlying issues, but underneath all of that, it is still true that nature restoration and nature preservation needs to happen, needs to scale in order for us to stop our planet from warming, and that carbon offsets and carbon credits are the single scaled commodity and financial infrastructure for doing that. So we have to make it work in order to protect the last remaining forests around the world, in order to grow new forests, in order to leave behind a world that's greener than the one we came into. So that's kind of our thesis, our goal, where we're coming from, where I'm coming from. But would love to take you guys through a little bit more of the background of how we rate projects. You guys can still see the deep transparency. Just want to make sure because I'm switching through tabs. Okay, sweet. So welcome to Renoster. Our goal is to provide deep transparency for these carbon markets, and we're hoping to do that through an open and scientific rubric that we share with everybody. I think that it's no surprise to everybody here that the era of climate action is upon us. Many corporates are now spending on either buying credits or buying insets or buying some version of carbon commodities in order to offset their emissions, in order to reach their net zero goals. I think every month or so we get a new governance structure or voluntary structure around how to do that. And I think that's led to a lot of stagnation on some level, but still a significant interest in doing the right thing and supporting nature restoration. And at the same time as we're relying on this carbon infrastructure, like I said, there is a lot of criticisms. There are questions from academic papers that say 73% of these very credits may not be genuine. Our research says something similar. There is risk factors that get introduced when organizations unwittingly buy low quality offsets from projects that are not so good. There are a significant lack of quality options on the market. So their buyers are kind of in this conundrum of which ones should we buy at all. There is a complicated landscape when it comes to price. So we have direct air capture credits that might go for hundreds of dollars, and then you have forestry credits that might trade for as low as sub $5. And so it creates a lot of variables for any buyer to look at any institution and at any institutional level. And at the same time, there's a opaque and some would say inefficient market at play that I think is underpinning this whole space, which is if you're a landowner, you're on the left here, you're an NGO, you're a timber company, you're a small landowner somewhere, you have to deal with this huge black box of the carbon markets before it ever makes it to the end buyer, who is a large corporate like we talked about, or a carbon trader, or someone who's going to buy your credit. And in the meantime, you're losing 40 to 60% of the value that's being, kind of eaten up by these fish in the middle that are, the verification bodies. They like Vera. They are the project developers like South Pole. They are the independent verifiers that do the rubber stamping. There are the brokers and other players in the space. And I've simplified some of this because I think it can get it's even more complicated than what we've laid out here. So not all of those players are brokers in that last slide. But nonetheless are taking up a piece of that value chain before it ever makes it to the landowner. And we think that's a problem. We think that this is basically an issue of scale, and it's a case that when projects get too big, this number rises, and it ends up being that very little of the money actually makes it to those communities at the end of it. There are risk factors that are I've mentioned a few times, but they are at the heart of why corporates are now looking at quality with a much more rigorous eye. we've seen, BlackRock and Disney and JP Morgan and plenty of others now getting called out for buying these poor credits or credits that are not as additional as they could be. And I think this has become a significant part of their equation now of how do we assess credits? How do we understand where they're coming from? How do we understand their core principles and whether or not they're falling under some reliable removal of carbon from the atmosphere. And that's really where we come in. So this is our goal is to provide like I said, deep transparency perspective on what's going on with these carbon credits, measure them using remote sensing, using satellite imagery, and sense where carbon is being sequestered. And essentially we do that by looking at nature-based projects around the world. So we've looked at this point, 175 nature-based projects, which are forestry, mangroves, and peat bogs. We have a set of remote sensing tools we use to do this, and then we score those projects based on a numerical rating system. So the idea is in the market that 1 credit is equal to 1 ton. We've seen is far from the case many times, and sometimes you have credits that are equal to 0 or equal to 1/3 of a ton per credit, or you have credits that are actually way more than 1 ton of credit, 1 ton of carbon per credit, which we'll dive into in a second of how that can be possible. But the basic idea is that we want to review all these projects that are on the market and then periodically make our reviews public. So actually every review that we do, we want to share with the world in order for the floor of the market to really reevaluate and to find essentially a value add for the right projects that are having the impact, that are performing well, so that they can trade for a number that makes sense, the number that leads to carbon finance working and making to the hands of the community at the base of it. And to do that, we look at a number of different core factors related to carbon credits. Pardon me. So we've got 5 pillars here. So we've got additionality. Is the project justified in existing in the first place? Is there some counterfact, some example to say that these trees were at risk, or these trees would have been planted anyway, that we can unpack and understand based on remote sensing, based on what has happened with the landscape already, so that we can get to the heart of, is this project additional? This is really important because without this, everything else is more or less can be thrown out. Projects must be additional in order for them to be qualifying as carbon credits. And then we look at the baseline. So although we have identified that this project is additional, to what extent is it additional? This is a question of a counterfactual. How many of these trees would have been cut down? How does their intervention, the project intervention, either by protecting these trees or by planting new trees, add to the amount of carbon that's here? Then we look at verification. So how much carbon has actually been sequestered over time? How did the project perform? Has it had any losses? Has it had any, even if it's an avoided deforestation project, has there been any deforestation? And we could take all that into account. We also look at leakage. And so we are trying to identify if the project is protecting a certain area, are they impacting adjacent areas? Right? Are loggers essentially going next door and cutting down adjacent properties that aren't protected? We look at permanence. So how long will these trees actually be preserved for? What's the risk of a flood or a insect damage situation or a fire? And how does the project account for all those in terms of its own carbon balancing, carbon accounting systems? There's also a huge component of community and biodiversity benefits that's not on the slide, but those are what is going on with the local community, what is happening with the project developers' claims of SDGs, so Sustainable Development Goals. It's alleged to adhere to, and are they actually being met? What are the biodiversity benefits that we've seen? Have there been any reintroduction of endangered species or some protection of those? How has the ecosystem been impacted by these projects? And those are things we cannot determine through remote sensing directly, and instead would lean on independent journalists that have been to the field, research that has been done on the field, and essentially people who have seen the project with their eyes. And I think that would go a long way in order to, provide some clarity into the differences between carbon projects that, have really pretty pictures of the one or two, wells or schools that they built, while not providing any of the bulk of the revenue to the participants, to the people on the ground, and those that do. So those are the core things we look at in terms of guiding our rating system. And I wanted to dive into these two projects in particular because I think these really paint the narrative of our ratings very well, in terms of the value add. So these are two projects taking place on the edge of the Amazon. They are both avoided deforestation projects. They're both through Vera. They both are actually super close together. They're 50 kilometers apart, but they have extremely different climate outcomes. So Manoa is unfortunately been unable to, or Manoa has actually done a great job, rather. They protected their boundaries and avoided trees getting cut down on their land. They have less than 1% deforestation. Meanwhile, Rio Preto unfortunately has had a much harder time. They've got something like 14-15% deforestation within their project boundary during the course of the project. So we're saying that if you buy one credit, you're going to get actually 0.29 tons from Rio Preto, and then you would get more than 2 tons from Manoa. In the case of Manoa, the reason why it's higher than 1 is that they were undercredited to begin with. They actually underestimated their baseline, and so their project, they underestimated the threat of deforestation around their project versus what actually happened. That they had way more deforestation along their boundaries. And so on the market today, unfortunately, this is the actual carbon estimate is almost completely out of line with the price. So Rio Preto, we've actually seen many vintages trading for higher than Manoa. And so that's a threat to both the system of pricing, because ideally pricing should follow the amount of the quantity of carbon, and also to a buyer who might unwittingly buy Rio Preto credits, not knowing that they're not as you're not getting as much carbon for your credit, and then be written up by a investigative journalist a few months later. But the reality is that under the numbers, there is a much different story here. Rio Preto, for example, has done a fantastic job of building up community co-benefits, of developing internet access, schools, and healthcare facilities for the people in the community. And so the story that we're trying to say is not don't support Rio Preto. The story is really Rio Preto is a project worth supporting. It is fundamentally additional. There is carbon there, but you should consider buying 3 times as many credits if your goal is to really get your full ton of carbon. And that's essentially the story, the narrative that we're sharing to our customers and to the market is these projects and credits in general can be used effectively if you use them with a knowledgeable eye or a perspective that you might have to overbuy credits compared to what is listed on the market. I'm going to dive into a couple of projects. So that's pretty much the synopsis of how we rate and what we've been able to do so far and bring to the market. I wanted to flick back over to the previous slide and dive into a couple of examples of carbon finance done poorly. And so I'll go over to My Dombe, which is a project taking place in DRC in Africa. And this project is, a darling of the carbon world, I guess you could say. It trades for, at the moment, at least on Salesforce and Zero platform, it trades for 19 or 18 bucks a ton. But in reality, I think that, or if we scroll down here, we can actually see that it's got some sustainability development goals. So there's like decent work, economic growth, reduced inequality, life on land. All these things that point to say this project is fantastic and it's well worth supporting. And we don't disagree with the idea that there is a threat of deforestation here. But in reality, what's going on when we review this project is, if I actually can go over to our science page briefly, I can demonstrate this, is that the amount of deforestation taking place here is not been stopped at all by the project. So within 13 years, the project has been going on. The deforestation during that time has been immense. So something like 60+% of the forest has been deforested. None of the project has actually been able to stop deforestation in the meantime. And also from the community co-benefit side, we found detailed reports that 64% of the people living within the project weren't even aware of the project's existence. And that of $200 million that this project has managed to generate in 13 years, only 76 cents, a maximum of 76 cents, has been distributed to each individual within the communities. Not per year even, but for 13 years. And then at the same time, there's a 20% infant mortality rate. There has been numerous attempts to block individual independent journalists coming into the area by Wildlife Works employees, calling the police and soliciting the arrest of these journalists and getting community members to recant their testimonies about how they don't like what's going on within the project. So these are all harrowing stories, right? That we want to surface and tell our customers that essentially the truth of what's going on within the DRC, within this project. And then at the same time, today it's still plastered across, Salesforce Net Zero. It's being bought by corporates that are kind of unwittingly supporting this activity. That's one. The other one that I want to show real quickly is Kariba, and this is even more egregious. This is a project taking place in. Actually, I can go to our. We wrote a blog on this exact topic.
I might interrupt 1 second to ask if we were going to, after your presentation, we'll take questions, but do you want the attendees to ask questions and interrupt, or you prefer to keep presenting and then take them after?
I think I'll wrap up within 5 minutes and then I'm happy to take questions.
Thank you.
Yeah. So Kariba is a project that we reviewed, and this project is taking place in Zimbabwe in Africa. And it's another project where the project developer, essentially, this is the project boundary, but they were claiming that there is a 100% deforestation within 30 years. In reality, that's the deforestation rate here is 0.01%. It's going to take 1,000 years for this forest within the white lines to get cut down by the local people. And you can kind of make out some of the very minimal deforestation that's taking place with these colored pixels across the landscape. And we shared this with the world. We actually said that, hey, this project is overcrediting to the tune of 30x. So it's getting 30 times too many credits that it should have been getting. And that out of the $500 million that they've generated in the past 10 years, they have shared 80,000 with the local community in Zimbabwe. And that it essentially amounts to, essentially amounts to just robbery, right? You're generating an asset that is worth, $500 million in revenue, and you're sharing next to nothing with the community. And actually Zimbabwe, independent journalists went out and they ratified our findings. They actually sent people into South Pole to identify that it was an active choice. It was a manipulation of the science that they'd done at the time, and led to the nation of Zimbabwe having a moratorium placed, or they placed a moratorium on their carbon offset projects taking place within their territory. And we think that this is a good thing. We think that although it has to be acknowledged that the money likely even now will not make it to the people on the ground, it can be a force for good, in the sense that other countries around the world that have a significant carbon resource, particularly in the global south, should start taking their natural resources into account when you go to negotiating tables with Vera or with any other body that wants to build a carbon market that is international and not just within their own markets. So that's all like the examples of stuff where it's gone really poorly and the money has not made it to the ground at all. I wanted to shed some light on some really good projects where the money does make it to the ground, and that we do think are amazing and worth supporting. So the TIS program in India is a program enrolling hundreds, or in this case, thousands of small farmers who have small slices of land with individual payments, so that they can essentially continue to do their project. They're grouped up into a collective, and it is unquestionably both additional as a project, but also delivering individual carbon finance on the individual level. So these people are being compensated directly for their work. We think that the tree CO2 program is the program taking place in Timberless. This is also a program where the additionality of their work is unquestionable, but they're also extremely transparent in how they direct payment to each farmer. So they actually have a huge PDF or PowerPoint, which says exactly who's getting paid, the math behind it, and it lists all the complaints of the farmer into a database that is also publicly provided. It uses that to track, uses this spreadsheet system to compute carbon stock for the projects, to provide every single tree an estimate of how much carbon there is. And in a country like Timor-Leste, which is one of the poorest countries in the world, there is an annual income of less than $4,000 per year. These are substantial payments that can make significant impacts in the lives of these farmers. Unfortunately, these both are examples of extremely rare infrastructure when it comes to carbon finance. It typically goes from project developer to implementation partner to some version of government before it makes it to people. More than most times, this money is lost along the way. It never makes it to the people on the ground that are doing the work. But we think that both of these are fantastic examples of what can happen when you have mobile money directed to individuals that doesn't use blockchain. It doesn't use bank accounts. It doesn't use like smart devices. It just uses direct payments and is very successful at enabling farmers and individuals in these communities and villages to put food on their tables while also preserving nature. And I think that's a consequence of both having the project be much smaller than these like multinational gigantic projects that service 40 million credits, down to just having a number of credits on the order of a couple hundred or a couple thousand that deliver tangible benefits. So that's a high level overview. I'm happy to take questions and dive into anything that people want to hear about.
Excellent. Thank you so much. There are some questions in the chat already. I don't know if you're seeing those, and invite everyone on the channel to also raise your hand or ask the question directly to Saif. I had one in the beginning just to kick us off is, do you get permission to score the projects, or do you just decide who you're going to measure?
Yeah, so we don't get permission per se. I mean, I think the direction that we go in terms of which projects to rate is based on our customers and what they're buying. So typically projects that we're rating are already on the market. They're existing projects that have already signed up as part of the system, and so they're kind of out there in the public domain.
Okay.
I'm also seeing, I'm happy to just take these questions as in chronological order. So Tobias, to your question, to what extent do you work with the projects to verify findings with ground truth data if available? We ask the project developer for items that are not provided to the registries. The way that it's supposed to work is that the project developer is supposed to provide all the relevant project documentation, is in particular location, to the registry when they're submitting their content for review. And then we're able to get everything we need directly from the registry. If in the case of certain registries, they don't require project locations, we reach out to the projects to identify where they are. And there is a component there. but we also want to maintain a safe distance, basically. I said, a prescribed distance from getting validation or verification for every aspect of our work. And that primarily is because we've been led astray by project developers they want to paint too rosy of a picture of what's going on. And I think that's where many of our ratings differ from others, where they do have tighter relationships and they end up rating projects that are covering up stuff and have false positive information. So yeah, we try and stay have a kind of a distance from that. And do we plan to add a pricing element on top of the carbon sequestration? Yes, so I'll actually share this really quickly. I think this is something that I thought you guys would be interested in, and it looks like you are. Can you guys see my screen real quick? So this is a price versus rating versus price paper that we were writing. And essentially what we're saying is that on the x-axis is rating. So your ideal number is one carbon ton for one credit. And then on the y-axis you have price. And so in a rational market, you would expect a linear slope between low quality and low price and high quality and high price. So what we actually found is that there's no conclusive correlation between price and quality, which is a bit alarming. It seems to be the case that as you reduce quality, there's a higher price variation. So these projects up here, we believe basically that they have really good marketing and have been, similar to my Dombe, been able to shoot way above their carbon belt, if you will, in terms of getting a high price per credit. We also break this down by different project types. So we can identify what are some of the core characteristics of pricing between IFM, improved forest management projects, afforestation projects, and avoided deforestation projects, which tend to trade for way less, especially given the recent market criticisms. So this is a piece of work that we've already done, but what we're doing is releasing a automated version of it that connects to live data in terms of the market, because we think it's more valuable for people if you can identify the changes through time instead of having a static report that will kind of go out of date very quickly. Let me take a break and I'll ask Juliet for your question.
Yeah, thanks. Very interesting, and sort of playing a really important role in the market in terms of sort of building that integrity, which is so important. I wonder whether you're, because you have to be sufficiently robust in your own methodology in order to be able to sort of stand behind it. Because I imagine that you must have good liability insurance in the event that someone comes to you and says, well, actually you're not saying the truth and you've measured it in the wrong way and stuff. So I just wanted to get your perspectives on that aspect and how you're sort of ensuring that what you're putting out there is the truth, and that you're not sort of setting yourself up to have backlash from people that you're criticizing. And the second, just about your revenue model. I mean, how do you make money, and who's your client here? So yeah, interested to hear about that.
Yeah, totally. So let me handle the first one first. And we think that, I think that there's a very real sense that we're opening ourselves up for criticism. And that's kind of the point, if you will, because if I go to our science page, we want to demonstrate, or actually, I think I've unshared the.
I should put on white paper.
Oh yeah. So this we want to be very clear. I think Jane shared this in the chat. We want to be extremely clear about how we rate these projects. We think that you can't trust ratings if you don't have an understanding of what goes into them. And so for every project review that we do, it looks exactly the same, because it looks at additionality, what are the answers to certain questions, like does this project have clear and real documentation? And every time we do a review, so if I go here to our review page, Every review that we do is actually, it looks exactly the same as the, so if I click into one of these projects, and when we make our reviews public, we make this public as well, alongside, pardon me, I'm having some Zoom difficulties here. But so every time we make a review public, we have the same exact rating criteria and our findings, right? So does this project have real and clear documentation? It passes, and then here is our reasoning, and here is the outbound link for where you can identify. But in this case, the project boundary is not supplied. And so for every one of these sections of additionality, the ones that I've talked about before, we have these questions that in every report are the exact same. And so people know what to expect. If there is a criticism that a project developer, for example, wants to levy at us, then we take it on board. Our doors are open, and we're more than happy to revisit if there's some material thing that we've missed. This is a case where we don't want you to only rely on our own data. We also share, for example, the Japanese Space Agency's data or the Global Forest Watch data. So for example, here, this graph from Renoa is the red represents deforestation that has been caught by Global Forest Watch in the intervening period of 2000 to 2010. So I'll stop share. Is immersive view? What is immersive view? Should I continue sharing my screen, or can I stop?
Yes.
I'm gonna stop. Oh, okay. We're just sitting in a classroom now. I see. Okay, so.
Okay.
No worries. I think that so the commercial model. The commercial model essentially is we have a database subscription. So we've rated about 175 projects, about 420 million credits under our review. And so our customers are signing up for a subscription where they can access that data. They can pay for additional requests as they need them. We have a starter subscription and a pro subscription, and they kind of just differ in terms of how many credits or how many additional reviews you might want to make. I'm happy to connect with you afterwards on actual pricing if that's of interest, but that's a high level how it works. Easy additionality criteria, the one that leads to the most problems. I think I think so, but I think that it's kind of a little bit more cut and dry than their baseline. Baselining is really challenging. It's particularly in different climates and or ecosystems. And I think that is where data quality really starts to matter. So when you start to review projects in the domestic US, you have a much better understanding of what's going on in the surrounding regions than you do in Papua New Guinea. And so those are material issues that we take into account when we rate a project. We want to be very clear with our customers that, hey, what is the associated uncertainty with this rating, and so that makes its way into our project reports whenever we have any issues around data. Tim, you've asked a question. How do you differentiate from other competitors and substitutes in the market? So you may have heard of Silvera, NB0, and Calyx. I think many of the ways that we differ is a philosophical difference to start off with, which is we don't trust anything from project developers, and unfortunately, we've been led astray far too many times for us to just take people at their word. And so everything that's put into the project documentation, we test rigorously against, even from a cheating perspective. Essentially, we've identified, 22, 23 different ways project developers have flubbed the numbers, have put their fingers on the scale to get more credits than they should have done. And so we take a very hard line approach to identifying their performance. I think the other way is we provide a number. Many of the others are providing a bond style rating system. So it's, AA, AAA, something like that. In our case, we believe we can identify, how much carbon there is per credit and provide you with a value that will hopefully be able to be used in trading applications, and in cases where you want to have a discount rate for a credit, in the cases that you want to have a derivative of credits. And so from a financial analysis perspective, it's a much more useful unit of measure, and more kind of accurate unit of measure than a AA, which encompasses a wide band of carbon sequestration, numbers. So those are the main couple of things. I believe I've answered Tobias's question alongside that. Tobias, is there anything else there that you wanted to ask around
No,
differences?
sorry, I didn't see the previous question. Sorry about that. But yeah, you absolutely answered it. Thanks.
All good. Yeah, I'm just crunching through this, but I'll stop. And I think Jane, you had a question.
Well, I just wanted to follow up on Malika's question about the additionality. If the scoring, do you tend to see, what's the pattern you see? Is it more that they're over qualifying? So is the scoring lower than it should be, higher than it should be, or lower than it should be? What's the pattern that you're seeing in the projects that you've been reviewing?
Yeah, I mean, I think by and large, projects over credit. I think that's a trend that we've seen. And even if I share my screen now, without like a demo mode on, you can kind of see that many of these projects are below 1, and in many cases, way below 1, right? We have some projects that have over credited, and those are, again, a case of baselining gone awry, because ideally, like Indus Delta Mangroves is actually one of the best projects on the market today, and we think that essentially that they should be a prime example of how to do this right. But in many of the other cases, we've seen numbers that are typically less than 0.5. So it does tend to be a trend that, and I don't actually blame. There's a world in which it's the case, and Tim you can touch on this too if you want, which is that in certain jurisdictions around the world, it becomes very difficult to sell a carbon credit project at a dollar value that makes it sustainable. And so I think that the people behind these projects are not doing this out of their nefarious intent. By and large, I think they're doing it to support communities that need carbon finance to protect their livelihoods, to protect their ecosystems. So I think this is a world of like mostly well-meaning people. I think there are your South Poles that are out there that are like, okay, we can get, we can make hundreds of millions of dollars. Let's do it. But I think by and large, it's been the case that that it's well-intentioned on some level, like on some level it's rationalized. Who are the main subscribers, and are they prospective buyers of credits, or a mix of organizations? So they do tend to be the buyers of credits. I think that it's the case that if you have a carbon portfolio, you really do want to, in this day and age, want to check its quality, and you want to identify if you have risk factors where credits are less than you thought. Either you want to buy more of them, or you want to pivot to a better set of projects. We are working with a couple of carbon funds that are looking into making investments into new projects. And so for those folks who are actually getting into identifying and checking project developer numbers, again, independent of project developers directly, but double checking their work while the project is being originated, while it's being set up, so we can we don't have to wait for them to run the marathon, and then when they come around the corner, throw egg in their face. Right? We want to support projects. We want to support investors to enable better projects to exist now, because unfortunately, like I said earlier, Austin is heating up everywhere. It's experiencing climate effects. We don't have time to waste. How long do our ratings take, and at what point would you approach a product developer that would use this type of service? So again, our main customer is not the product developer itself. There's an independence from PDs. Typically working with those investors. We have originally started with just what's on the market, existing projects. Now we're trying to get into, or we're getting into, like I said, earlier and earlier stage projects, down to even site selection of how much carbon would you sequester with these 3 sites. You want to put a project somewhere, and working with the investor on everything from there all the way to we've selected a site, we've selected a project type, and now we're trying to create values that we can for the baseline. And we have these set of numbers, review them, like are they any good? And so we're reviewing them for those carbon funds. I'll stop to take a question from is it Jacinda?
Hi, yes, Jacinda Njike. I'm here in Cameroon. Thank you so much for the presentation. My question it goes to the introduction of the biodiversity credit and the integration of SDGs into the carbon market. Where do you see this going, and how do you evaluate this? I know that there is some debate, about whether the biodiversity credits is, really a viable market and how it interacts into the carbon market. So it would be good to know from you, especially since some of the bigger projects that I see that had the projects are more in that, align with that. And also the second part of that is the DRC project that you mentioned had all these positive SDG things, but then obviously it wasn't producing at the end. So do you find that these projects with SDGs are often problematic, or are there some strong ones in that area? Thanks.
Yeah, thank you for your question. Very, very timely. Yeah, I think the biodiversity credit. So going back to to answer the question, I think I'll have to go back to the carbon markets briefly, which is to say the biggest issue with the carbon markets is we don't understand the asset well enough, right? Like with oil, like we know exactly how many liters of oil go into, a barrel of oil, and it's all uniform, always the same. With carbon, that's not the case. And with biodiversity, it's even less the case, unfortunately. And the reasons for that is we're kind of lacking the infrastructure, and that's kind of what we are personally working on, but we're lacking the infrastructure to assess the amount of carbon. So once you have an understanding of the amount of carbon, you can build a market around it. You can correct for that graph that I showed before, where there's dots everywhere. You can correct that into hopefully a more straight line, where you understand that low quality is low price, high quality is high price. With biodiversity, the case is that we have even less of a knowledge of how to track this over time effectively. I think I've seen some people doing bioacoustic monitoring to say, well, there's in year 0, there's this much wildlife or like bird song that we can detect in these projects. And then in a year later, there's a little bit more. There's a year later, there's a bit more. And that's the only version that I've ever seen of someone being able to, test and verify that biodiversity is increasing in any capacity. And I think that's unfortunately not as scalable as we need it to be. And so while I think they sound like a great idea, I think that I haven't seen a lot of progress being made in setting up the market. Like I think they're just talk about the market. So there's that. SDGs, I think they can be by and large a marketing mechanism, way more than actually like, hey, we're gonna adhere to these. I think it's much more of a stamp of approval, and the more stamps you can collect, like the more gold stars, or like the more badges you can collect, the better of an Eagle Scout you are, right? It's really not a case of, hey, we're gonna stick up for all these rights that we planned on doing. And at least in our observed experience, that's been the case. I think that of course there are counterexamples. There are examples of which they said that they're gonna provide for example water, like wells or clean water, and they did, right? But is this the norm? No. So yeah, that's kind of my perspective. What are the majority of the projects that we evaluate on a regional perspective? They are pretty much actually evenly spread out between the different continents. So in terms of credits, I think they're evenly spread out. In terms of projects, I think we've reviewed a lot of North American projects. There's like IFM projects that just generate way less credit. So I think by and large, it's split evenly between South America, North America, Africa, and Asia. There are we haven't reviewed any European projects, and there are no projects in the Arctics or Antarctica. So yeah, that's the Australian market is not, or the oceanic market is not open to the rest of the world. So we haven't had any customers from there that have been asking us to review their projects yet. Can you elaborate? Oh yeah, please.
So what is the cost and timeline to review a project, if that's something you can share?
Oh yeah, sorry, I missed that one. How long do our ratings take? So they take about 5 to 10 business days to turn around per rating. It is a number we're trying to bring down to a couple days, and we actually just started a whole bunch of scientists. So we grew the team by 100%. So we've got 6 people now that are working on these ratings, and yeah. So the objective is to be able to turn around, every 2 to 3 days a full rating with 25 pages of diligence, an accompanying video if you don't like reading PDFs, and then over time making more and more of those public. Yeah. We have 5 minutes. I know there's like several questions. I'm not sure if I'm going to be able to get to all of them. I love that you guys are coming with these really like thought-provoking questions, and I'm more than happy. I am personally, it's like 8:55 a.m. for me, so I'm more than happy to stay on a little bit later, but I don't know how you want to handle it, Jane.
Yes, maybe we can just answer this last question about mobile money, how the payments actually get to the communities, and what kind of technology they're leveraging, if anything, and then I could wrap up any of the other questions. If you wouldn't mind answering via email, it would be great.
Yeah, for sure. So I can. Okay, so I think basically that I will answer the last question first, which is why don't they do it more? And I think it's a case that mega projects don't have the infrastructure or the stakeholdership to care enough to do that. I think that basically there's a large amount of money, and there's many stakeholders along the way, and there's not like a specific community perspective that they take. When projects become way smaller, I think that's where we've seen this happen. In terms of mobile money, I think the impact is they've used it to disperse funds to farmers that are not on the blockchain, or they don't have savings accounts or bank accounts. They have a mobile phone, and they have the ability to transact and buy using that. And so I think those events are rare, and I've shown examples of a couple of them. So in terms of frequency, they're also quite low. But when they happen, it's immediate impact, right? It's tangible benefits. It's food on the table. I think I'm happy to also connect with my co-founder Elias, who's been doing a lot of research into the community co-benefits side of the space, and I know for him it's a really important aspect as well, that these projects become smaller and not bigger, and he can share more context as well on how the role of mobile money and stakeholdership within these projects.
Absolutely. Yeah, I think we were trying to understand what are the payment rails, if it still has to be cash, especially in terms of farmers or more vulnerable groups, such as women farmers. Great,
Yeah.
Thank you so much. We have a couple of minutes and maybe just want to wrap up, but first to thank you for super interesting and expert talk. And as you saw, we're peppering with your questions. You had barely had a chance to drink water or anything. And just really appreciative of the time and the ability to share what you guys are doing. Any of the follow-up questions would be we'd be grateful if you can answer those. And I think just to highlight from your perspective, if after this session, if in this conversation around transparency and quality, whom else we might speak to as part of this learning series. So just a note for you there. And to the rest of the attendees and members to highlight that the session today with Saif was our inaugural learning brown bag #1, and so the next one we'll have is on September 1st with Kim Ruff from Imperative. She's the CTO there, and they design operate and develop and operate large scale carbon projects globally, and also use technology to optimize those projects. They focus on LDCs in emerging markets, and so very excited to hear on the back of this presentation on understanding the way to quantify how that translates to project development, and maybe an opportunity to understand the economics there. So just again, thank you to Saif, a big round. However, you delivered that on your Zoom. Thank you so much. It was really wonderful to have you, and everyone else for making the time to be here. And thank you, Tim.
Yeah, thank you guys.
All right. Well, good afternoon, morning, everyone. We'll see you in the next session. Thank you.
Thank you.
Bye.
Thank you.